Welcome back. A couple of stocks doing well. We have Bajaj Auto, which has moved closer to the high point of today's trading range. Comes out with numbers today. Comes out with numbers tomorrow is Colgate. So that stock too has moved quite well, up about 3% as we speak. But the biggest mover from the IT space right now is L&T Infotech, 4.7% constant currency growth, which is the best that they've posted amongst all of their peers, and which is why the stock is surging. We have Mr. Sanjay Jalona, who joins us to detail those numbers. Mr. Jalona, thanks a lot for joining in. First up, what's so different that your company is doing as against peers? Haven't you faced the impact of COVID-19 on your business? If you could explain this sort of growth to us.
Yes, these are unprecedented times, and none of us have experienced anything like this before. And as an organization, I think all the leaders, the entire company has shown great character in focusing on employee safety first, and then keep making sure that we keep the promises to our customers. So overall, marginal impact of COVID on our Q4 performance. We simply had the momentum going after 8% quarter-on-quarter growth in Q3. And with the large deals and the strong pipeline that we had, we were able to come out very strongly in Q4 as well. We did announce a few deals, 2 large deals in Q4 as well today. But yes, we will have a COVID impact in Q1 and definitely for Q2, as well as companies start with COVID issues.
Well, Mr. Jalona, first of all, congratulations. It's been a rather strong showing in the past year as well as, in Q4. So good on you. But you were just talking about the strong deal wins. Do you think some of these large deals will ramp up as planned, or could there be some sort of delays? Is there a risk out there?
So right now, things are changing very rapidly, but I can tell you how things stand now with 8-9 weeks of COVID and work from home scenarios that we have seen. All the large deals that were going on have been as per a plan. We have done transition. We have cut over to steady state. We have also been pursuing large deals while some of them have gotten delayed, some of them have gotten cancelled, but by and large, business has been running as normal and customers continuing with doing the large deals. I was just telling an audience before that there was an orals for a presentation where we had 50 people logged in from their respective homes from our side, and customers also had something like 30 people from theirs. So everyone is turning and learning new things in this new normal. But I think overall, we do expect some delays on discretionary spend by customers, but people are trying to see how best to be productive in this new normal.
All right, Sanjay, if you could then tell us, how FY21 is likely to pan out. FY20 was solid with 14% plus constant currency growth. If you could tell us what is in store for FY21 in terms of revenue and margins.
Look, if you step back, we just finished, I think, 4 years of after we've gone public. So if you look at 4 years, we have done a double-digit constant currency growth. We did have a difficult H1 in fiscal 20, but as we had commented, we will come out strongly in H2, which we did with 8% in Q3 and 4% now in Q4. We have a healthy order book. We have a healthy deal pipeline. We announced 2 large deals, and we are continuing on. We are working on closing some more in Q1. We were set up very strongly for FY21 overall, but obviously short-term challenges on COVID-19 have sprung in new for just like everybody. The same impact is there for us as well. But there are verticals that are more impacted than not. Travel and hospitality overall, luckily for us, we don't do any business there, and obviously this is a vertical which is hugely impacted in the marketplace. Retail also, our business is more on CBG side. Retailers, we have limited exposure, so we have dodged the bullet on these 2. But overall, manufacturing is also impacted. Automotive is also impacted very heavily because you're not manufacturing automotive. What's the question of doing a lot of IT work there right now? Oil and gas is also impacted not only because of COVID, but also because of the low oil prices, leading to a lot of discretionary spend being curtailed. So where we stand today, if I were to reflect back, 4 years of strong performance in FY20, strong H2 for FY20, good order book, great pipeline. I think we'll be in a good place for FY21, barring COVID short-term challenges. Now, we refrain from giving numerical revenue number guidance, but we would continue to say what we have said, like in the past, that we want to be in the leaders quadrant. As and when it comes to growth, we've demonstrated that in 4 years, and the pipeline and the order books give me the confidence that we will continue to lead in the growth terms. As far as your question on margin goes, this is again a short-term COVID-19 issue. We got to be closer to customers. There are different criteria and requirements that we have with customers, and some places we have to give commercial discounts. Some projects are getting delayed. We want to make sure we continue to hire and invest in our business. So we'll continue to do that, use all the levers that are in our hand. We run a program called North Star, which has helped us drive up efficiency in our operating margins that you have seen in the last 2 quarters. And we will continue on that path. So continue on the path of driving down waste, cutting down the waste, removing white noise, focusing on businesses at hand, and investing back in the business will be the call of for 21. The important part is that we want to come out stronger, closer to the customer, taking whatever hit is required in the short term.
Well, there's no doubt that the revenue growth was quite strong for the past quarter. But given that it's Q4, was there any growth contribution from pass-through revenues?
Yes, there is. Typically our Q4 has a pass-through revenue every year for the last 4 years. It comes in every Q4. It will be around 2% of our revenues. 2% of growth will be accounted for that.
Okay, got that. Final question then, Mr. Jalona. Any outcome of immigration and customs enforcement raids that was conducted a few months back? Is there any outcome, any kind of clarity on that front?
Look, we are fully cooperating with authorities. These are typically legal matters, and they take time to conclude. And we are committed to provide a workplace, which is fully free of discrimination and equal opportunity employer as well. Right, and we will see. We expect to continue to partner with the authorities, and we'll have to wait for it.
Well, thanks so much, Mr. Jalona, for stopping by and giving us all those details. Wishing you all the best for FY21, though, as you said, there could be a lot of uncertainty and could be a bit of a challenging one as well. But for the time being, let's turn our eye away from the markets for a short bit. Cyclone Amphan, one of the worst storms over the Bay of Bengal in years, is expected to make landfall this afternoon near the Sundarbans. That's between Bangladesh's Hatia Islands and West Bengal's Digha. The cyclone, equivalent to a Category 5 hurricane, is expected to have wind speeds of over 150 kilometers per hour, accompanied by sporadic but heavy rainfall. The NDRF teams have been deployed along the coastline, with majority of people having been evacuated.
All right, with that, we'll wrap up on this edition of Chartbusters. You stay tuned to CNBC TV18. Trading Hour comes up next.